Welcome to the Franchise Masters podcast, where aspiring entrepreneurs learn what it takes to find, buy, and build successful franchise businesses. My name is Dru Carpenito, and I'm your host as we dive into these fascinating behind-the-scenes stories of people who have used surprising franchises to create massive success. I'm glad you're here. Let's dig in. Welcome to the podcast. I am here with Ryland Beard, who is the founder of Ledge, which is an accounting, bookkeeping, and finance firm and service for small business owners with a strong bend towards franchise owners. And this is going to be fun because we're going to talk about a topic that's maybe not as fun or as sexy as some other topics in entrepreneurship.
Hey, now.
But this is one of the most important things. Yeah, it's an important topic, but we're going to have fun with it.
We're bringing sexy back, Dru.
Bringing the sexy back. That's right.
No, it's a pleasure to be on. Thank you for having me.
Yeah, man. No, I'm glad you're here. Because you have an interesting story. I mean, you're young, crushing it on the entrepreneurial side, but that wasn't your path to begin with, right? Like you were on the corporate side and had an idea and decided to get after it. Tell us a little bit about you.
Yeah. So I was in a cube. This was pre-COVID. I'll just kind of give you like the nutshell version of how I started the company. I was in a very typical office job. It was at a fast growing company, which was super cool. I joined the company. We had a couple locations. It was in kind of the restaurant, food and beverage space. And over a couple of years, we grew it to 75 or 80 locations. And it was awesome. So my role was director of finance and sort of moved up to like the CFO role. And that didn't mean much when I started at 2 locations, but it meant a little bit more as the company, continued to grow. And, but my job was essentially helping to raise money and helping perfect the books and perfect the accounting standards and make sure that the company was growing in a way that was sustainable. But there was a huge problem. And the problem was the accounting of our franchise owners. So there was basically 2 issues. One, the franchise owners would do their own accounting, and not that they couldn't. Anyone can take the time to study and learn how to do bookkeeping, accounting, tax filings even, but it just wasn't worth their time. They could be focused on sales, they could be focused on income, they could be focused on hiring their teams, the culture. Like there's so many more things that are important than tedious bookkeeping. And even though bookkeeping is important, it doesn't drive profit, right? It doesn't drive sales. So naturally, they got a little bit disillusioned with that idea, and their books were pretty disorganized. And then the other 40 or 50% usually hired a local CPA, and that person just wasn't familiar with franchise accounting, nor did they have a reasonable, cost. So 2 really bad options, right? Do it themselves, struggle, waste a lot of time that's precious, or hire a local CPA and, pay an arm and a leg. I looked for a company when I was in my role. I looked for a company that I thought would be a good fit. And I just could not find any company that I really trusted. There were some like national bookkeeping firms, but I didn't really feel like they had the relationship. And, the opportunity was there. I could sense it. And around the same time, I met my girlfriend who lived in England. She's Polish, but she grew up in England, and we wanted to see each other way more. So I remember like the first time we met, I just flew over to England for the first time, and we met in probably 24 to 48 hours. We had been talking like months and months, but just hadn't been able to see each other. And we immediately hit it off. And so I wanted to see her more, and she was 4,000 miles away. So with my 8 or 9 days of PTO, that just was not an option. And so, I'd always wanted to start my own business, and I felt like this was sort of like the catapult to let me do so. And I felt like if there was ever a time, it was at that point. It was now. And so I left that job with literally just the business being an idea. It was, not making any money. It was I don't even think I had a website up and going yet. So that was probably a pretty dumb and stubborn thing to do at the time. But, it really kind of like lit a fire under me. And my goal was 9 clients. And the service, you alluded to this earlier, but the idea of the business was to provide accounting, bookkeeping, sales taxes, and tax filings on a monthly retainer. So around $300 to $350 is our average price point per client. oriented around franchise brands, because if you kind of go into one, you understand how to scale from there. If you really perfect and spend a lot of time with one. And honestly, it was way, way tougher than I thought. So for the first like 4 or 5 months, I really struggled. I burnt through my savings. It was not pretty. I like quit eating for a little while. Like I was just in a really bad position. All I was doing is working around the clock, and I just could not find the solution to my problem. And the more I dug into it, honestly, the more I struggled, until I really kind of zoomed out for a second and I thought about my message, my pitch, my delivery, my services, my price point, and my audience. And ultimately, when I kind of put all those things together, I realized what I was doing incorrectly. And it all started with my message. So I was kind of pretending to be like this bigger company than I actually was. And thinking that, oh, I have to seem that way to get my first client, right? Like, who's going to go for this guy who has nothing, and no references and no support from any kind? Like, who's going to go for that? So I made this mistake of trying to become trying to represent a bigger brand than I actually was. And then very quickly I realized, like, I just got to be honest with these people. And almost as soon as I started doing that, I got a little bit of interest. Still no, still knows, but I got a little bit of interest. And then after that, the little bit of interest told me that, okay, well, if one person's interested, then surely, there's got to be more people out there. And from that point, it just became a numbers game. A lot of
That's
emails.
Awesome.
Yeah. I think I sent on average like 600 emails a day for 3 months. I mean, it was unbelievable.
You're grinding, man. I mean, that's the grind, right? It takes us sometimes to go into the valley to be able to come out of it, right? But you made it. So there's a lot we can unpack there and dig into, man. But
sure.
Congratulations on making the jump. I know that's never an easy decision to walk away from the paycheck to follow an idea and an inspiration you have. But I'm curious, Who was your first customer?
It was a guy, his name's Mike, in Ohio. And I remember talking to him. I remember the moment. And I think it was my 7th call. So I had about 6 no's before that, but I felt like I was getting closer. Like I could just feel it in my heart that maybe, if I can just get one person. And so I called Mike and gave him a sweet deal. He agreed to sign up for a month, like no contracts. I don't do any contracts even today, but that was a big point for him. And he decided to give it a try. And my original goal was 9 clients. So if I had 9 clients paying me on average $300 each, that'd be $2,700 a month. If I had $2,700 a month, that would cover my expenses. If I lived on like a shoestring budget, which I have no problem with. And then, fast forward to today, we've got 378, I believe, as of this morning. So, it's been a rocket ship for sure. It's been a ton of fun, and almost exclusively from just word of mouth.
That's amazing. Cause just kind of getting to know you. I mean, I think you have an amazing story coming from, the company that you work for. If you don't, can I mention who it was? Is that okay?
Let's keep it under wraps for now.
Okay.
Because there was some stuff going on.
Okay.
Not involving me, but I would just prefer not to say.
Yeah, no, all good. I figured that might be why I didn't mention it, but it was in the franchise space. Like you knew franchising. You had worked with franchise owners. You understood the dynamic of how a lot of it is first time. A lot of franchise owners are first time business owners, and if you don't have any experience with accounting and bookkeeping, it can be really intimidating. And a lot of people just never deal with it. And they just end up running their business by their bank account or out of a shoebox and don't get good information to be able to make the decisions they need to, keep the business going or focus their time on things that are working really, really well and doubling down. So, you have a unique perspective and a unique background coming from what you've done to what you're doing today to really hone in and specialize on small business owners and franchise owners. I think it's a great thing. So you just kind of needed to get that dialed in a little bit and maybe kind of embrace your story and go with it and get some leads, right? Get some bats to the plate.
Yeah, exactly. It takes some time. Like nothing's overnight, there's no such thing as an easy route. At least it wasn't for me. So it took a lot of just like silent nights thinking to myself, like, what am I possibly doing that's wrong? And I thought to myself, like, man, if I could just get nine clients, that's all I need. Surely there's 9 out of the millions of business owners that are in America. Surely there's 9 who would say yes. And so that was my goal. So I started with like a baby goal. It wasn't like, let's grow this multi-million-dollar company. It was like, let's survive and just have enough money to, like I said, see my then girlfriend, now wife. And that was it. I feel like too many people start businesses and, they have like this unrealistic goal and without setting like mini goals, baby steps, right? And if you do that, and if you just focus on like little at a time, it becomes doable and it becomes digestible to an extent.
No doubt. Because I think starting any kind of business is there's a massive thing of delayed gratification from the financial perspective. Any business is going to take some time to ramp up to get to the point where it's breaking even and then cash flowing positively and then paying you, the owner. So you need to find different, like you said, baby steps or baby goals to get gratification out of, to know that you're on the right path. It's building, it's growing. It's not going to happen overnight, but you're headed in the right direction. If you keep going down the path, you're going to get to where you want to go, but you need to know where you want to go too, right? Like having that end
Yes.
goal and knowing what you're marching towards, but pulling gratification out of things that maybe you took for granted in the corporate world or whatever it may be is a really important thing to keep in the mind, set, focused, and healthy as you're building everything.
100%.
Fast forward, you have 330 clients now, from 1 to 9 to 330. There you go. And you're working with some of the biggest brand names in franchising. I mean, you're in Exponential. You're working with the Club Pilates, Yoga 6. I mean, it's not easy to get into the ecosystem of Exponential. So you congratulations.
Thank you. Appreciate it. Yeah, it's good, man. It's really, if I can just interject a little bit, it's, you hit on this a little bit earlier, but from an accounting, bookkeeping, financial reporting perspective, what these people want is, they want a catered CFO-like service, which essentially tells them exactly what their performance is, explains sometimes difficult to explain financial topics to them in a very, easy to understand format. And they want it for a reasonable cost, and they want all of their accounting included. And they want it to specialize not in franchising, but in their brand. So like really honing in on that specialty is what we're the best at. So kind of the method to the madness is we get in, we learn one, and then we give them an amazing service, and then they tell all their friends. and that's how it works from my end.
I mean, word of mouth, right? The proof's in the pudding. And
yeah,
how you built.
It's also the cheapest form of advertising.
Well said. But it's also the most expensive to eventually get to. Sometimes
Sure.
You got to buy your way to get there. No, I think I'm so tempted because I think with what you said about being working with a lot of franchise owners of a particular brand, you get to know that business really, really well too, in terms of what the top performers are producing at benchmark wise, cost of goods sold, labor, whatever, profit margins, obviously. And then, what the not so top performers are doing. But maybe we'll dive into a little bit of that without getting into specific brand names and maybe specific numbers, because I can't really get into numbers on this, but maybe we could talk some benchmarks and percentages of what you see with your unique perspective into the different types of business and clients that you're working with. Do you get into taxes as well, or do you mainly handle the bookkeeping?
We do. Yeah. So we started with just the bookkeeping because that was what I was most accustomed to and most familiar with, but we've kind of dived into tax returns as well. So we do business returns. We do a few personal returns. Out of our 370, we have about half use us for taxes. So we do quite a few tax returns every year, and we're actively just growing that part of the business. But the idea for taxes is if we're in there every single day, every single week, looking at every transaction to make sure it's all reconciled and accurate, and we're looking at the financials monthly, it just makes sense. And why not add on the tax return, because we're the ones actually verifying throughout the entire year.
1,000%.
Yeah, and we can do it for a great price too.
Yeah, well, I mean, because tax planning as a small business owner, Like we all want to legally minimize our taxable income as possible, right? But so are you, I mean, have you been able to help franchise owners, or do you have any perspective around the tax planning piece of thing and how you're able to help people save maybe more on taxes than they would have thought by the perspective you have?
Yeah, quite a bit. When we have those conversations, normally the cadence in which we do it is twice a year. So we have 2 tax planning meetings per year per client. Everyone's a little bit different. But there's no secrets. There's no loopholes. There's no, I feel like a lot of accountants try to glamorize taxes as if they have some secret knowledge that no one else has. The reality is the way to pay the least amount of taxes is to be extremely organized and to be diligent with your bookkeeping, to not pay for any business expenses off personal cards, to know exactly what your depreciation is, maximize your depreciation, and so forth. And the way you can do that, it starts with the bookkeeping. I think a lot of tax accountants fall into this trap of not paying attention to the bookkeeping, taking whatever they get and hoping for the best. And that's just the reality of the industry. But if you start from a different perspective, if you start from the perspective of bookkeeping first, then when it comes to taxes, you really know where you're at, and you really can save the most amount of taxes as possible and pay as little as possible. So in my opinion, it always starts from just being diligent, being organized, and making sure that, the I's are dotted and the T's are crossed.
Right. Well, it makes sense. Like you're not, you don't have clients that are walking into their accountant's office with a pile full of receipts and a pile full of invoices and from the previous year and saying, okay, hey, now it's time to go through all this stuff to figure out what I owe in taxes. And you starting them off right and organized from the beginning and staying on it and helping people. You're helping, like a lot of time, again, you're helping people with stuff they might not appreciate the value in, I think, because of what the other side of it could be if they don't have somebody who understands their business that's helping them stay on top of the numbers and stay on it every month. Because as soon as you get behind on the books, it's a nightmare to try to catch up. And it ends up costing you a heck of a lot more time and a heck of a lot more money than you probably think, rather than just staying focused and setting it up right from the beginning.
Exactly.
So do you typically work with franchise owners from day one as in terms of, when they're in training, or is there a certain time that you typically will engage a new franchise owner?
Yeah, that's a great question. Anytime really. So, from day one is preferred on my end, just because of the reason you mentioned. You want to build up that foundation, that base of accounting. But a lot of people switch because they have problems. So, a lot of people come to me with terrible bookkeeping, with inaccurate tax returns. They need this and that done, and they know that it hasn't been done properly, or their accountant's taking forever to get it done, and it's not being done, by the first week of every month. So we get a lot of clients who have messy books, and that's just part of the business. And frankly, for us, it's a good thing because it gives us an opportunity to show them what good bookkeeping looks like and what amazing financials actually feel like when you're receiving them on a frequent basis. So it's something that we're used to, part of the business.
Yeah. Well, I mean, it's very dynamic in what you do because you're working with entrepreneurs, and some are very experienced entrepreneurs and some are first-time business owners. But once, like what you said, once you get into the rhythm of a particular franchise and brand, it makes helping the other franchise owners in that system so much easier, because you can help them see if they're missing an opportunity, right, for certain deductions or whatever it may be. Or if in the other case, if they're getting a little too aggressive, you have those benchmarks to be able to, in that perspective, to help those owners.
Yeah, absolutely. And, a traditional accounting firm has 100, 200 clients, and every single one of them is different. So there's no sense of scale. They're not thinking that way. They're just taking whoever walks in their door. And what that means for the clients is that they can't specialize directly in the brand that they're serving. They're trying to have more of a generalist approach. And that seems to work well, maybe like in first thought, but in reality, like you need to be, especially in today's world, you need to be a specialist, and you need to be specializing in a particular brand or niche of clients, like franchise fitness, club Pilates, just as an example that you alluded to.
Yeah. And a good accountant and a good financial partner on the bookkeeping side of things are worth their weight in gold. it's one of those things that you can't appreciate it until you fully understand what it's like on the other side of not having people, and maybe, not taking advantage of the taxes, the write-offs, and, all the depreciation, like you mentioned. But there's ways that one of the biggest questions I get is around finances. When I'm helping people find and buy franchises, they're like, hey, do you have a referral for a good accountant? My advice is always, number one, we just, we're getting to know each other. So I'm probably going to have some more referrals for you and your business now, Ryland. But, I was like, look, you find a local accountant who is used to working with franchise owners, because that's that's who you want. I don't have a direct referral for you. So it kind of validates the space that you're filling with helping to specialize in brands and helping to specialize in franchise owners, and doing it in a very reasonable way. You're not, your price point is attractive. I'm sitting here thinking about myself and some of my businesses, and some of my books could probably use some help from Ledge. So it's cool, man. I'm definitely going to have some referrals for you and some opportunities. So what type of brands are you working with right now? Who are some of your bigger clients?
Yeah, so we specialize in brands, but we don't actually specialize in one particular sector. So it seems kind of strange to hear that. But as an example, we work with a lot of fitness brands like Club Pilates, Stretch Lab, Yoga 6, brands like that. But we also do iPhone repair. So we're all over the map. Ubreak iFix is one of our up and coming clients. They fix iPhones and iPads and TVs. We also do home restoration. We do, another one of our clients is a maintenance provider for swimming pools. Some of our clients are e-commerce brands doing millions and millions of dollars per year. Roofing repair. Really just you name it. The secret for me, it doesn't really depend on the sector, but what I like to do is really understand the intricacies behind a brand. And if we do that, it just carries over. And then this is another kind of separate business almost from Ledge, is our tax credit filing. So I don't know if you've heard of this. I think you'll find it really interesting. The ERC credit, employee retention credit, it was introduced during the time of COVID, and it's been a huge deal. And we've been able to help owners get, probably on average 35 to 40K back in just the check from the IRS. So it's been unbelievable. We can go into that if you want to.
Yeah, I think it's for where we are right now, because it is not everybody knows about it. That's the surprising thing. So can you talk to us a little bit about what the credit is, and anybody that's a current franchise owner out there or business owner that needs to be some things to think about?
Yeah, happy to. So ERC is an acronym. It stands for Employee Retention Credit. And what that means is it's a credit based on wages in the period of when COVID affected your business. So all these retail businesses, a lot of different franchise businesses qualify for this, and they're eligible to receive it, but they don't know how to go about getting it. So it's a credit. It's, like I said, based on wages. It factors in a few different things like PPP, how much you applied for, the forgiveness period. There's some details, and there's some serious math and accounting behind it. But the reality is you can get back a significant check from the IRS if you kept employees on throughout 2020 and into 2021 last year.
And if the business was affected, is there a qualification for determining if it?
Yeah. So it's I won't get into too many details here, but it varies based on the tax year. So 2020's eligibility criteria is different than 2021, but it's basically a function of either a revenue decrease or where you're located. So if your state, more of the liberal states, had significantly more regulation around COVID, so they qualify for longer periods than say Texas or Florida, and I'm in Texas. But it just depends on either location or overall revenue decrease. And even if you haven't had the decrease, but you have been in a state which prevented you from doing business in some capacity or another, you could qualify for it. And so it's something really important to kind of keep on the roadmap. And I love helping our owners find this, because it's something that they probably would never even think to know about if we didn't approach them.
No, it's huge. And I've even, with some of my friends that are entrepreneurs outside of the franchise world, their accountants have had different opinions about this whole thing. And I think they're getting some weird advice. But working with someone, again, the value of working with you and understanding, not just working with a single type of business, but multiple owners of the same business, you can understand the dynamics and the opportunities that are out there for something like this to be able to help advise people on what's going to be, just give them the information for them to be able to make a decision what's best for their business.
100%. And the ERC is like, it's just such a massive tax credit. I really think it's once in a lifetime. So, people have to take advantage of it while they still can. I think we've got about a year left to seize that opportunity. The unfortunate side to ERC is that all these accounting firms are charging, just insane rates for this. So 15, 20% of the total credit. So, if you get back $40K, you're paying them $6,000. It's like, well, that's not their money. That's not their credit. So what we do is we charge a fixed fee per quarter that we file for. So if you file for it and you get $1,000 back versus if someone else files for it and gets $100,000 back, it's the same amount of work for me. Right. So frankly, it doesn't matter. So we do a fixed fee schedule. It's very reasonable. And my ultimate goal is to introduce people to our accounting and bookkeeping services.
Yeah.
So it's kind of like a lead to that,
I'm glad to hear you say that, because there is a lot of, there's some pirates out there that are totally taking advantage of small business owners around this, this credit, this free money, whatever, however you want to look at it. I know I have a good friend who I've helped buy a bunch of different franchises, and I haven't seen his books, but the amount of money that he told me he was getting back from, and he runs, he has 50 plus locations of a particular brand. It was life-changing money that he's getting back that he earned. This is deserved earned money, because any business owner that fought through that stuff that we had to go through and they had to go through, this is earned money. But it can be significant.
It's huge. Yeah. It's what's causing some inflation right now. That's for sure.
Yeah. What's the most you've seen somebody get back?
Hundreds of thousands of dollars. Yeah. So, part of me is like, I'm extremely happy to help my clients. But when I think about the global, sort of effect that things like this are causing from the government side, it's unbelievable. When you look at the fact that in inflation adjusted dollars, we spent more on COVID than on World War II. It's really shocking. So this is obviously a very, very small part of the total spend for COVID. So I don't mean to overemphasize that at all. And I do think that a lot of business owners deserve it, like you said, and they need it. But the reality is a lot of business owners didn't deserve it too. And some of them were failing before COVID, and then COVID propped them up. So it kind of kept alive companies that should have been passed on to future people or sold or just ended, frankly. So, like I said, beyond blessed to have the opportunity to help our clients succeed. But it's a little alarming when you zoom out and think about the sheer number of businesses taking advantage of it. And some of them shouldn't be. Yeah.
Yeah, no, it's definitely, it's been some wild times for sure with all the government assistance. But again, I think even for finance and accounting professionals too, it's been a massive learning curve for you guys to get up to speed on all these changes and all the, the nuances of the relief stuff, let alone, every year there's always these changes in the tax code and stuff like that. So I think, again, looking at a partner like yourself, not as a cost, but it truly is like an investment that maybe people spend a few $1,000s with you a year. I don't want to use the word guarantee. Most folks are probably receiving a multiple of that back in terms of savings and efficiencies, maybe taxes, who knows, but it just goes to show you that finding the right advisor to help guide you as a business owner into making the best decisions for yourself and your business is invaluable. And it's easier said than done to find the right advisors.
100%. It's very tough, especially for a reasonable fee, and I think that a lot of good people charge a ton of money, and that kind of excludes them from being able to work with people which are small business owners, and that's totally fine. But our goal is a little bit different. Our goal is to scale. We want to make as many people happy as we possibly can. And the only way to do that is by a reasonable price point, incredible services, relying on word of mouth marketing, and 99% retention rate. And we literally have a 99% retention rate. The only time we lose clients is when they sell their businesses. There's not much we can do about that, or when we cut the tie on our end. So, that just happens from time to time. But yeah, it's been great.
And you're working with some of the most reputable franchise systems out there that I think have some very talented and very successful franchise owners, and that it's not their first rodeo. So yeah, there's a lot of data points that speak to a lot about what you're building and what you have built, and the way you're growing. That's awesome, man. All right, so I'm like dying to be nosy, and I think you have a unique vantage point into the books of a lot of different types of businesses, and won't talk brand specific. I don't want to make it awkward for you, but I am curious because I think I was meeting with somebody this morning, like talking to somebody about the different businesses and how different businesses make money and how much money certain businesses can make, that a lot of people, when you just look at it from the customer's perspective, you might dismiss it, right? Like a disaster restoration business or like a Pilates studio or whatever, right? But some of the most successful franchises out there are these overlooked, surprising, kind of maybe mundane type businesses. But if you peel back the onion and you look at what's possible in terms of just what the margins are, how the business is set up, they can be great businesses to get into. So I am curious, like with your vantage point, what are just from a financial perspective, like what are some of your favorite types of businesses that you see?
Yeah. So I'm happy to give you specifics here, but let me just preface the answer with, it all depends on the owner, right? So if you're an owner who is just kind of buying the franchise to sit on the sidelines and hope it makes money and not be very active, you're probably in the wrong industry, because the best owners that I see, even if they're 10 or 20 unit owners, meaning they own 10 or 20 locations, they're still there. They're active. They're managing effectively. They're true leaders for their organization and their culture that they're building, even if it's within a franchise system. So it does depend on the work that you do as a franchise owner and so on and so forth. So that said, let me answer your question. Usually the less glamorous businesses are the most profitable. Usually, because there's less competition.
Right. People don't want to get into them, right? Not as many people want to get into them.
Yeah. So I'm thinking specifics, like there's a franchise called PuroClean Restoration, extremely good. They bill basically insurance companies to repair anything from like homes to roofs to just basic restoration
water damage services. Or fire damage, any kind of disaster.
Exactly. Any sort of disaster. Exactly. Club Pilates, another great brand. They're more known. Obviously, it's heavy branding, B2C model. But there's a lot of specifics as to why the Pilates studios do really well. Just think of cultish following, a great community, amazing people that go to them. It usually caters to a more affluent crowd, which has the money to spend on something like boutique fitness, which I think helps them in the long run. Another great one is ASP, America's Swimming Pools. So what they do is they have routes and they go and essentially make sure that pools are safe to be in, clean. They do residential and commercial pools. They also do construction for pools. So, that's a great model. Another great one is Home Watch Caregivers. And I love them. I think they're a very recession-proof model. So what they do is they provide care to the elderly. So that's something that, no matter if there's a recession or the economy tanks, there's still a high demand for that. And that's not something that's going to go away anytime soon. So anyway, those are just a few specifics. I could go on for longer. Sorry, there's a little gnat buzzing around my microphone. I could go on for longer, but
no, it's good.
Those are four. Yeah.
Yeah. I mean, Pilates, disaster restoration, senior care, and swimming pool maintenance, service, and repair. I mean, those are, that's a diverse set of different types of businesses. But again, it's one of these things. And like, unless you're, tied in and looking at things from the pure entrepreneurial perspective, a lot of times, that's why these certain types of franchises that can be good businesses if you operate them correctly. You made a great distinction there about, the franchise is the franchise, but it does come down to the owner,
Sure.
1,000% in terms of how they operate and how the X factor. I guess that's always the biggest inconsistency in franchising is typically the franchise owners, right? How they operate the business. It's not necessarily the brand itself. It's how people are operating at a local level. So for sure. Yeah. Well, you mentioned the scaling piece. So I'd love to dig in a little bit on that.
What kind of jumps out to me is the rate at which Ledge has grown without marketing. So going from, I think the first year, first 5 months were brutal just because of being an early business and trying to figure everything out. So I don't even really count those, which gives us really 2.5 years. And then the first year, my goal was to travel with my girlfriend to be really straightforward. So I was more focused on giving a great service, of course, but like less on the growth of the business. So that's like a year off. So truly it's been 1.5 years. And in that 1.5 years, we had COVID happen and sort of the after effects of that. So we went from 0 clients to today about a few over 370. We represent 40 states. And the way we've been able to grow is certainly by hiring amazing people first and foremost, but it's also figuring out how to develop the business around processes. So how do we type out 370 emails to be sent on the first week of every month, have every line in the emails be a perfect performance summary of the actual performance of the businesses, P&L, the balance sheet? How do we explain those topics in one email? And how do we make every single email tailored, not for a brand, but for an individual? Because everyone's different. Everyone's different in their approach. And the way we've been able to do that is by automating certain processes and by, if I showed you our tech stack of the software we use, it's probably like 60 plus software pieces that all work together in like this really, really perfect way to deliver not only the financials, of course, but the performance summaries. So the trend analysis, like there's so much that goes into it. And I think that's been a really cool way that we've been able to grow, quickly.
Yeah. And like, was the business, did the business start to take off and grow at the hockey stick kind of level? And you were like, we gotta figure some stuff out? Or were you like intentionally kind of taking it one step at a time and you kind of knew what the infrastructure would have to look like as you started to hit certain growth points? What was that like for you?
Yeah. So more so linear, really. Just at a steep slope. So once we really kind of figured it out, we started growing pretty quickly. No, I didn't focus on the software at first. It came with scale. And what I realized is that when you're growing a business super quickly, you want to always look for software first. You want to look at how to automate first, not after you hire your employees. You want your employees to utilize the software tools, not see them as competition, which is a really important point, because if you look for ways to improve before hiring, you teach someone how to use that tool to be able to scale further. And if you hire someone first and then try to automate their task, be careful. That's kind of dangerous. Like if I were that employee, I'd be really frustrated because I'd say, well, you're trying to automate me out of a job. Come on, that's not fair. So it's really important, that distinction. And I think that that's something that we did very, very well. And it all comes down to just thinking through it and the people.
Yeah.
Sorry, go ahead.
Automate first, like you said, as the business is growing, like that's a very wise thing. Are you like from an entrepreneur perspective, like, are you tied in with other masterminds or any groups, or are you rolling this thing kind of solo and literally just, with these great guiding principles and figuring it out as you go?
Yeah, I've got a super smart team. So that is like the number one thought that my mind goes. My first employee, his name's Bruce. He's a CPA. He's been a CPA for 25 years. He took a major risk. He took a probably 50% pay cut to join the company and gain more of like an autonomous role. And he really saw the future. So he's kind of like that guiding CPA with a ton of knowledge. My second employee, Derek, he's the smartest person I've ever seen work Excel. I mean, he can literally take things and use Excel in ways that, and I thought I was good. I thought I was pretty solid at my programming and Excel skills, but no, I'm nothing compared to him. So, it starts with it just having a great team. But I also love to read. So my first book that I got when I started this company was The 4-Hour Workweek by Tim Ferriss. Really common read, but I took away so much from that. And I love the way he kind of like digests the ways to figure out how to automate a business. It's tough when you have a service-based business because it's a much easier to automate a product based business, but there are ways to do it. It just takes a lot of time. And the challenging part is, you want to keep that relationship up. You want to have like an amazing relationship that's oriented around trust, because we are looking at someone's bank statements and someone's accounting and their financial records, and having a confidential relationship built solely on trust is really what made the difference. And then a second book, which I just started reading, is by
is that Russell Brunson?
Picture of it. Yep, Russell Brunson.
Yeah.
I've really enjoyed this. I just got about 3/4 of the way through it last night, and learned a lot about kind of the value ladder approach to doing business. I found that particularly helpful.
One
Hey-o.
right there.
There we go.
And then the other one right there.
Hey,
there you go,
nice.
man. No, it's cool.
I love it.
Yeah, because I mean, not to get personal, but I mean, it sounds like the lifestyle piece was a big part of why you decided to do what you're doing originally, and as you've grown it too, right? Like, because I mean, that's the best part of being a business owner, is this idea of lifestyle creation. Like, you can have a lifestyle that you can't have working for somebody else, as long as you're wise and you have to build a good business, deliver good service, but that you don't have to be chained to your desk 9 to 5.
No, you don't. And when I started this business, it was in beginning of 2019. So this was before COVID, and the idea of kind of like working remote and working from any country around the world was like kind of like taboo a little bit at that point, because no one was really doing it. Everyone was tied into their offices. But when I read that book, a friend of mine gave me that book right after I started the company, and it just totally opened my eyes. And I felt like, I could do this from anywhere. We're so blessed to live in an age where the internet allows us to, command this like autonomy to start a business, to deliver, to have the most amazing customer service, period, while being in Italy sipping from a latte with my girlfriend. I mean, it's just stuff that I would dream about 3 years ago. So
Yeah.
the ability to actually do that is it's really special.
So do you have any big travel plans lined up?
Well, because of COVID, I've really just kind of taken a little bit of time off. We went to Dubai recently. We're going to Costa Rica next month for about a week. Before that, we spent some time in England and Scotland. And then during COVID, we traveled around the States quite a bit. But when I first started the company, I mean, we didn't even have a home. We were literally going from like country to country, Airbnb, and it got tiring. After like 8 months, I was tapping out, because, you can't, what I learned kind of the hard way is that structure is so necessary. And without a structure, if you're worried about where you're going to sleep the next night, what Airbnb you're staying at, there's no sense of structure, and you just can't operate. At least I couldn't operate to my full potential. So what I needed was like a home. I needed to, my wife has a business too. That's why I say we, but I needed to be able to wake up, 6 a.m. on the dot, have my clothes laid out, go get a workout in. Okay, great. I'm going to Whole Foods for their breakfast burrito. I'm going to go back to the office after that. I've got 6 hours of quiet time. Then I take all my meetings. That's really how I was able to grow my business. And traveling around is great. I'm a big advocate of temporary vacations. My wife and I like to get out at least 4 days a month and go somewhere new, just so we don't kind of fall in our comfort zone too much. But yeah, it was definitely a lot heavier traveling in the beginning than it is now.
Yeah. Well, and I mean, there's so much self-awareness in what you just said too. And you knew maybe something wasn't feeling right, and just taking a look at it with, being able to look at yourself and look at the issues. Sometimes that's hard, as we're in the grind, in the weeds, sometimes just be able to take a step back and say, okay, hey, I think I need to try something a little bit different. Let's try it this way and see if it works better. And pay attention to the results. And if it keeps working, then you keep doing it and rinsing and repeating, and
It's 100%.
then, get it going, and then you can have the fun, right? It's
Yeah. Yeah. And I think another thing about scaling a business very quickly is that, you have to know when you are working in the business rather than on the business. And that's a common topic in a lot of these like books similar to this one. And it's easy to read that. And it's really easy to say, oh, I get it. But it's a lot harder to actually do that in practice, because I'm frankly, just to share a little bit more into like my day-to-day schedule, I love customer service. I love helping people. I love just being able to pick up the phone on a whim and say, yeah, let me help you with this filing, whatever it is, and just like guide them through it, whether it's in our scope or out of our scope. I don't even care. I don't bill hourly, don't do anything like that. I just love it. But the reality is that's not growing ledge. That's it is to an extent, I guess, with the word of mouth advertising. There's no denying that. But when I zoom out and I focus on the business as a whole, like where are we going to take this? What are we going to do? How are we going to get there? It's totally different.
Yeah, but you got to scratch the itch sometimes, right? If it brings you joy and energy, because I mean, that's part of it. Absolutely. Is keeping your energy positive, right? And going, so that it keeps you fresh and keeps you inspired around figuring out the next step as you continue to scale and grow. So yeah, I think a balance, right? Like that's the moral of the working in versus working on is, you've got to find a balance that works for you personally, and whatnot. So
yeah, I definitely tip in favor of working in the business rather than on the business, because that's my go-to. Slap open my laptop and just get started and calling people and all that. But it's interesting to think about it from both perspectives too. And what I've learned is that with Ledge, and I'd be curious to hear your thoughts on this with your business experience in the podcast too, is when I'm how do I say this? It's almost like a game. Like it's kind of like a gamified approach to doing business where, the things I do are very serious, obviously with accounting and tax related, but it's all a function of process. It's a function of service and ultimately getting the word out in the form of word of mouth marketing for me. So what it's done is like what I've learned is if I put more effort into any of those categories, the results higher. And the beautiful thing about being an entrepreneur is that there's no ceiling attached to it. So the more you do, the better the result is. And if you do it in a kind of logical sort of approach and you've really got a plan structured behind and the purpose built in, the sky's the limit. And it's unbelievable. If you would have said I would be at 370 today, I would have probably, I don't know. I just wouldn't have believed it. But, my goal was 9. So
it sounds like unreal. You've done a really good job of focusing
sorry,
on. You there?
Sorry, give me 1 second.
All good.
Okay. Can you say that again?
Yeah, no, I was going to say, I was just saying that it sounds like you've done a really good job of figuring out what's most important to focus on in your business to keep moving the needle. Like you said, the word of mouth advertising, providing a great service, focusing, on those kind of things, which, it's like the 80-20 rule, right? Like if you can focus on the 20% that moves the needle, that 80%, and not necessarily spend the rest of your time trying to gain that incremental 20%. It's
sure. Pareto's law, right?
Yeah. But figuring out what that 20% is really hard. Like it's not easy to then, because you end up spending a lot of time doing other things to get to that, vital few things. But it sounds like you're honed in and what's moving the needle in your business, and you've got a formula that you can just keep rinsing and repeating.
Yeah. Yeah. One thing, speaking of like the 80-20 principle from the other side is what I learned, I think this was about 1.5 years into the business, was there was a small fraction of my clients taking up all of my time. It's probably 70-80% of my time. And it was so hard to make the decision to cancel the agreement with them. It was tough because, just a few months earlier, I had no success and I was just asking for one person to come along. But the reality is, like, you've got to recognize that a small fraction always take up the majority and do something about that. So, I was in a position where, like, just saying this kind of as to help any other entrepreneurs out there. I was in a position where I struggled with having to say, I'm sorry, this isn't going to work out, because it was extra money on the table. And I didn't have that. I was broke, before starting this business. And ultimately, when I did have that uncomfortable decision, it took me way too long to make the decision to cut it. But once I did, we doubled. I mean, just like very, very quickly, because it freed up 80% of my time.
So what was it that what was it that got you over the hump of making the decision to cancel the agreements or fire those customers?
Yeah. 4-hour work week, Tim Ferriss.
That was it, really?
That was it. Yeah. I mean, I read it and it just made total sense to me. And I feel like sometimes you have to read it before you process your own situation. You have to like understand, oh, other people go through this. This is very interesting. He went through it. If I had to pick, I even think in the book, it says, think about where you spend all your time. Where are your 20% of the clients costing you 80% of your time? And once I saw that, it just became so clear to me. And then, it is frankly like a conversation that I was a little bit worried about, because I felt blessed for the growth of Ledge. And I felt like I was going against a blessing, frankly, to say no and cut that. But I realized, like, after, just thinking about it for a little while, it was the right thing to do. So
yeah, and I know that wasn't easy. You're an interesting cat. So a lot of the wisdom and a lot of the success that you've had, you literally attested to the 4-hour work week.
I love it, man. I love it.
Just opening it up and reading it as you're going through the journey of building the business. And
yeah,
that's amazing, because there's so many different.
I've read it 3 times now. So
yeah, and then you read it and you do something about it. You just you pick out a nugget or two, and it sounds like you take action and implement.
Yeah, 100%.
That's cool. That's awesome, because I mean, a lot of there's so many different resources for people to turn to get advice or whatever it may be. Some people choose to join masterminds like Vistage or whatever it may be, but you found the book that you can turn to help you think, like, kind of gets the wheels turning to work through figuring out things in your business as you continue to grow.
Yeah, totally. And I think that's one of the books. There's definitely others, but what I look for in a book is not necessarily direct wisdom. What I look for is it to make me creative, to figure out my own problem. So I'm not looking for answers. I'm looking for a book to like just make me think a different way, or make me think about something else that's happening. And then when I do that, it's like, oh my gosh, I didn't think about that. What if we did this? What if we did that? What if we automated this approach? I bet that could work really, really well. And sure enough, like, I think the books just play a role in kind of increasing creativity.
Yeah. So the 4-hour work week, everybody, if you haven't read it, you should read it.
Yeah.
And then you like Russell Brunson's .com Secrets.
Yeah, it's just my latest one. Yeah, .com Secrets is a great book, because it just shows you a different way to thinking about pulling in people. And obviously his big thing is ClickFunnels, or the ability to, put something out there online that people are attracted to. Maybe they get a free sample, they come into your funnel, they become a client after a while, you get their email, you send them a newsletter, that sort of thing. And ultimately it trickles down to a client. And then they're approached with this concept of like the value ladder. So the first thing that you do is probably not the most expensive, right? The first product or service that you're offering that person. But then once you gain their relationship, their trust, kind of the things we talked about earlier, you can sell them on a higher cost product that you're going to deliver more value for. And he talks about in his book where, his first one is the book. Like, it's literally the book. It's a, $10 book or whatever. But then his most expensive product or service on his value ladder is, I think, $250K a year for like this private sort of like inner circle club. So, whether you're a chiropractor or an accountant or any business, really, there's an opportunity to just think through, what are you doing? What product or service are you offering, and how can you better that and ultimately make your customers happier? So I think it appeals to everybody, but the goal is, what can you do? Be creative. I think that's what Russell Brunson's trying to accomplish.
Yeah, like you said, a good book kind of gets the wheels turning, right, and gets you thinking about how you can apply some of the different principles to your business, fix some things, and make some things better, and keep growing it. So that's great advice. Well, Ryland, man, I have appreciated it. Thank you for the time, and congratulations on your success and your growth. I'm very happy for you, and look forward to watching you continue to do amazing things with Ledge.
Appreciate
So if
your time.
anybody's listening and is interested in getting in touch with you, your company, to learn about your services, where can they find you?
Yeah, I would say just visit our website. It's Your Ledge, YOUR, ledge.com. And then from there, you can book a meeting. We'll have a conversation. We'll talk, diagnose your needs, and then go from there.
Very good.
Hey,
Check it out. You
thank
need
you,
any
Dru.
bookkeeping help. Ryland, appreciate it,
your time.
man.
Yeah, congrats on this podcast. I'm really excited and very happy to be one of your guests. It's been a lot of fun.
I'm glad you could come on. That's a wrap. Hope you found a nugget or two in there that can help you on your franchise journey. And if you ever want to talk franchising, reach out to me anytime.